Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly change for June 3rd through the 7th, 2018. We're going to take a look at last week's changes, which are up currently. We're going to look at the 4 main indexes going into the first week of June, the 3rd through the 7th. We're going to look at stock futures. We just had some big news come out, breaking news here on Friday, going into next week, which we'll cover here in just a few minutes. We're going to take a look at the entire S&P 500 movement for the week, and on Friday, huge uptrend as of Tuesday across the board, all index, silver, gold, bonds, everything was pretty much positive besides the dollar. Also, we're going to look at financials, home builders, energy, silver, dollar, gold, bonds, and mortgage rates. So if you're interested in any of that, definitely hit that subscribe button below. I cover these videos every single week just to kind of keep track of the performance of the markets. So if you are brand new to the channel, hit that subscribe. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, want to let me know what your gains or loss for the week is, drop it into the comment section or head over to my Facebook page, Instagram, and send me a DM or message me here in the comment section. And let's go ahead and get into the video. Last week's changes, May 27th to the 31st, we were on a 4-streak loss. Last week we were down 2.62% in the S&P, Dow Jones down 3.01, the Nasdaq down 2.41, and my portfolio was down 1.54%. We had been down nearly 4 to 6 weeks there with the Dow Jones in the market. And guess what took place this week? We made up over half of the losses for May in a single week. In 4 days, the S&P 500 was able to overtake that loss on Monday of 0.28. I believe that may have been the antitrust, the government coming out across Google, Amazon, Apple, wanting to divide them, kind of do an investigation on them. I believe that is why the S&P was down on Monday compared to the Dow Jones, but 4-day change, or basically 5-day change for the S&P 500, a big whopping 4.41%. Year to date up 14.62% there within the S&P. The Dow Jones much more positive here. Monday up 0.02, and across the board, this one actually came out, I believe this one's in first place right now, up 4.71% here for the week. Year to date up 11.39. The Nasdaq here is a little bit of a lagger here between the S&P and the Dow Jones. The Nasdaq up 3.88%. You can see here on Monday it did have a much higher hit. Again, I believe this is the antitrust that came out again against the tech stocks, and that hurt the Nasdaq. It also slightly hurt the S&P 500, but a lot of those FANG companies are tech based. So here the Nasdaq down 1.61. It did have a huge recovery after the Fed came out. After, I think this was maybe pre-hours or after hours, but I know when the Fed came out saying, well, they didn't say or did not say that they're going to be raising rates, but they kind of just said, we're not going to cut rates, and we're not going to raise rates. So that really helped out the market there. Up 3.88 for the week, 16.68 for the year to date. Currently, the Russell 2000 up 3.34%. Year to date up 12.3. That puts it, I believe, a positive. Okay, so it puts it in third place, right behind the S&P 500. Dow Jones is kind of still lagging behind the other main indexes. Stock futures currently positive right now, and this is primarily because going into the weekend after we closed, President Trump came out as a huge knockout that they're not going to be enacting tariffs. They made some sort of a trade deal between the U.S. and Mexico, and they believe this is going to help rally the market into the following week. We shall see how that all sort of plays out. There were a number of stocks here in the after hours that continue to move higher. We can see Kraft Heinz. That was one that a lot of investors had been kind of itching and scratching at to see if it is bottoming out in that $20 range. This one, I am not a shareholder of Kraft Heinz. It's not one of the companies on the Kraft end that I really buy myself. I do buy a couple Heinz products, but not a whole lot out there. Now, some of the laggards out there, not a whole lot that are recognizable. Omega Healthcare, I know that's a company I see a lot of investors get into for the high yield. You can get really knocked out by buying companies for that yield. Now, some of the most active companies, we can see Starbucks down slightly in the after hours, down 0.28. Bank of America also down slightly here in the after hours. eBay down nearly 1% there in the after hours. And so on, not a whole lot. Halliburton up 0.69 in the after hours. Microsoft up 0.04. and Coca-Cola down 0.19. So a few companies there in the after hours, not too many that are really well known. Now Friday, we had a whole lot of positions. Look at those FANG stocks bouncing back. Facebook up nearly 3%. Amazon, again, 3% there nearly. Apple 2.66. Google up 1.97. Microsoft, lots of the FANG kind of bouncing back. They were hit on Monday early on in the week. You can see that Facebook and Google are still down for the week. Google down 3.45%, Facebook down 2.32. You can see a whopping recovery, and Apple up 8.61%. This one really helped project my portfolio higher this week. AT&T and Verizon, they were slammed last week. Now going into this week, I believe they were down some 5-7% last week. Look at the difference from one week to the other. They almost made all of the losses that they made last week right back up in a single week. Microsoft up 6.24. There's just so much green across the board. You know, it would have been really hard this week to lose money. Now, if you invested in Fox Entertainment or Accidental Petroleum Corporation, you may have had some of those hard hits there in your portfolio, but those are not companies that I really hear too often brought up in the investing channels and groups and such. So kind of interesting. The financials for the week, you can see up 4.27% there. Year to date, up 13.85. Semiconductors, massive uptick there, 7.58%. Let's take a look at the 1 month. I know semiconductors were slammed here within the last month. They had a huge bottoming out period. Look at that volume get bought up here. That had it spiked just slightly. It did lose a little bit of momentum, and we can see a little bit of a trading volume, not, a third of it right here. And then we had the Fed come out, and as of that point, just nothing but positivity out there. If we look at the S&P 500 really quickly, I just want to bring this one back because I want to show you the 1 month performance. During May, we bled out week after week after week. Just the market just bled out. And look at this recovery in a single 4-day period. We made back more than half of what we lost during a single month. We made it all back within 4 days. That's just an amazing recovery there. Now, if you guys want to stop, pause the video, take a look at what took place here during the oil for the week. Oil actually moved higher. Overall, not too much higher, up 1.17%. But if you are an investor of single stocks, I know Chevron, Exxon, Mobil also had some very big moves. Exxon up 5.38%. CVX, Chevron Corporation, up a whopping 6.7% for the week. This is one I recently started adding to my portfolio just recently, about maybe 3-4 weeks ago. I saw this sort of bottoming out. I took the opportunity. So quick disclaimer there, I do own Chevron. The dollar. So as all the indexes, as oil, as financials, as silver, gold, bonds, they're all positive, the dollar did trend lower this week. We started highs in the $97, $97.64, and we trended lower and lower throughout the week. And we ended at $96.56, nearly a whole dollar below where we started this week out. So kind of interesting to see as gold, oil, S&P, all the indexes do positive. The dollar, of course, is going to be creeping down. Now, silver, I believe this is one of the biggest increases in a 5-day change for silver. I've been covering silver for a while. I was actually surprised that it stayed down on that $13 point for as long as it did, but we saw a huge uptick in silver. A lot of investors out there are saying this is all because of rate cuts. If rates are cuts, that's going to help materials out. That's going to see the silver and gold increase there. So I see a lot of investors beginning to pick up a little bit more silver, a little bit more gold. Buying silver in that $13 range, that would have been a really good opportunity just to kind of buy it, wait it out. Gold also doing a nice recovery this week, up 2.64%. Lots of positivity out there. And bonds, they also moved up just slightly here, up for the week, up 0.17%. This one did go ex-dividend here on the 3rd, which was on Monday. So on Monday, the ex-dividend there, about 20 cents of the share price was removed from this specific the share price in order to pay out that dividend and pay it out here in the upcoming future, which was actually Okay, so it went ex-dividend on the 3rd, and you would have got it in your account on the 4th. That's a very quick turnaround there where it goes ex-dividend and get paid out to your account. So kind of interesting there. Current mortgage rates are down for the week, down 14 basis points. So last week we had an uptick, I believe, of about 3 or 6 points, somewhere within that range. Now in a single week, we're down 14 points. 14 points is quite a bit to go down in a single week. So that is the markets, oil, silver, gold, bonds, all of that information. Now I was posting quite a bit this week. I covered last week's, of course, last week's information. I also covered what was taking place here on Monday. Big whopping last week's 8% loss there on Amazon. I saw a lot of investors diving into Amazon. I did buy a growth company out there. I'm not sure if I've actually told too many people, but kind of interesting to kind of buy a little bit of growth out there. Not such a dividend investor, but I did make a couple buys here on Monday in the M1 Finance portfolio. I posted it over here on Facebook. Now this is actually all positive now. It's kind of interesting that all these positions here, as I posted, I was down several percentages there, but guess what? As I bought these in the negative, I lowered my unit cost, I increased my increased my yield on cost, increased my overall dividends. All of these positions are now positive by multiple percentages in the portfolio, which is very nice. Let's see here. Continuing on, I posted how much dividends I actually received in May. I made a video on this, but I'm not sure if I would release it or not. But in May, I made $74.28. That is an increase there from $52.97 in May 2018. I made an additional $21.31 year over year. That's an increase there of 33.49% from last year's gains. Here is an interesting little deal that I saw here locally to my own area. They're selling a $1.1 million property. This is multiple properties. We can see here that this has 8 units. This is a 8-unit sort of apartment complex, sort of here, multiple duplexes, 8 units. And you can see all the rents, and I sort of think it's a little bit overpriced there for what they're trying to offer. Credit card information there from Chase. Markets. This was on June 4th. June 4th was the Fed. The Fed came out, they made their little chit chat, and they said, hey, we may or may not cut rates in the future. So here, Dow surges 450 points as the Fed signals it may help the economy if needed. If trade tensions between China and the US just continue into the future, they're not against cutting rates. They've already came out and said, hey, we don't plan on raising rates for 2019 for the remainder, but if this tension between the US and China continues, we also had tariffs enacting on Monday, I believe, in Mexico, and now they've decided, the Fed came out, and this really helped rally the market. I really wish that they would have just let it bleed out a little bit more. I was really enjoying seeing a lot of red out there. I'm not sure if you guys were enjoying it, but I was really hoping to just get more positions up in bought by the time they started to get out there and rolling it back out. But Twitter, tweet storms, or the Fed, they have an effect on the market that no one else can really sort of predict. So I thought this was an interesting read. This is like 10 companies that kind of control the world: Nestle, Pepsi, Coca-Cola, Kellogg's, Mars, General Mills, and a few others out there. I believe that's General Mills. Maybe not. But interesting article. 10 companies that kind of rule the world. This was the bumped app. I don't really go out there and specifically buy where the bumped app allows me to buy, but this is just very interesting that I have been shopping at Fred Meyer's. This is also owned by Kroger's. It's Kroger's brand. I shop at sometimes occasionally if I'm traveling between cities on business trip. I will pick up Taco Bell or something like that. You can see here that on my Taco Bell purchase, I was able to make 5 cents from Yum Stock. On my grocery shopping, when I go out and shop at Kroger's or Fred Meyer's, I get 4 cents there, 22 cents there. This is probably gas. This is probably food. And then Kroger, the company, paid me out 1 cent in dividend, which was reinvested for me. So I thought that was kind of interesting. I don't see a lot of investors out there really partaking in bumped, but I thought it was just kind of interesting. I made my 1 year comparison video between the exchange traded fund and my single dividend portfolio. Again, I hold both single stocks and exchange traded funds. My ETF is held within the taxable account and my single stocks are held within the Roth IRA. So I'd made my comparison video. It went over quite a bit of information between them and just kind of helped average into the market over a year period. Really helps out your portfolio, especially when we're in a down market. I came out here and posted over on Instagram that do take advantage of the dip. I know a lot of investors are sort of mixed between the Fed coming out and saying that, hey, if we continue to have tensions, we may perform some quantitative easing, we may lower rates. And I really didn't like this. I really don't like the Fed coming out and doing this where they kind of stopped the bleeding. We were bleeding, and the Fed's like, hey, we're not saying we're going to cut rates, but we're not saying we will either. It's just the market moved higher. So let me know, did you guys want the Fed to come out and perform that? This is the question I was emailed. I figured I'd just kind of share that with the group. Maybe other investors are out there interested. So here we have the stocks moving higher possibly next week off this news. So we were supposed to be enacting tariffs on Mexico on Tuesday the 11th. So on Monday after hours at midnight or so, they were going to begin enacting tariffs starting at 10% and working our way up to 25%. Well, they came to an agreement here. Trump says that the U.S. and Mexico have reached a deal to avoid tariffs. Lots of individuals were able to engage in this specific article, so just kind of interesting. Look at the performance there for the week. We've already seen this in the FinViz, but I just wanted to do a historical screenshot there and just show you that when the market is bleeding off, hold on average, especially if you're investing in something such as the S&P 500 or the total market. So if you're investing in, say, VU or VTI and the market goes down and you're negative, buy into that negativity because over time, the stock market has nowhere else to go but up. Yes, we crash sometimes, we have corrections, but over the long term, in the next 10 years, from this date, when you're looking back at today, when you're watching this video, would you have wished you had invested 10 years ago today from this point today? 10 years ago back in 2009 when the stock market was at an all-time bottom, did you wish you had been buying up stocks at this point? Or maybe just even 5 years ago, if you just look at just 5 years ago, do you wish you had just been buying up companies 5 years ago? So don't wait to invest. Don't try and time the market. Buy into the market at where you see value. Continue to buy in if the stock price goes down. And as long as you're picking or just investing in exchange traded funds that track the market, you're going to be really better off in your future. So that is primarily all I wanted to cover in today's video. I don't have a whole lot of other posts here that I shared. Oh, our 1 week change. We already sort of covered this, but June 3rd through the 7th, S&P up 4.41%, Dow Jones at 4.71%, the Nasdaq up 3.88%, and my portfolio at 4.86%. A lot of that was from Apple, jumping up nearly 8% on the week, and that was primarily it. I also posted that over on my Instagram. If you guys aren't following me over on Instagram, I will have a link in the description below. Definitely go over, hit that follow me over on Instagram. I post every single week. I post a couple articles. I'm going to start posting my buys on Mondays over here. So if you guys aren't following me on Facebook, but you can follow them on Instagram, I'm going to be posting what dividend stocks I purchased on Monday. I'll have a little bit of a snippet as to what stocks I buy. If I see some news out there that is interesting that I believe a lot of investors will like, I'll go ahead and post that. Of course, I do post my weekly sort of percent changes for the week to kind of track the movement of the market week after week. So that is it for today's video. Again, if you did like the video, hit that thumbs up button below. If you are not yet subscribed to the channel, hit that subscribe button below. I cover the stock market, dividends, real estate, personal finance. And again, drop it in the comment section. What was your percent change for the week? Were you positive? Were you negative? Let me know in that comment section. Thank you all for tuning in. I will see you next time. Have a great day. Bye.